All right, so we should be live here. Thanks everyone for tuning in today. This is going to be the Hedera Q2 analyst call with Messari. Today we're going to be talking about all things Hedera with a focus on Hedera's Q2 performance. Before we get going into the Hedera specifics, I think it's important to do some introductions. I'll start with myself. My name is Nick Garcia. I'm a research analyst with Messari, and I specialize in layer ones. If anyone from the Hedera team wants to kick off, go ahead.
Sure. I'm Brett McDowell. I'm the chair of the Hedera Hashgraph Governing Council and Board of Directors.
I'm Mance Harmon. I'm a co-founder of Hedera Hashgraph.
And I'm Shayne Higdon, the CEO of the HBAR Foundation.
Shayne, Brett, Mance, thanks for being here. All the HBARbarians who are tuning in, thanks for tuning in today. I think we're gonna have a good one. So let's just jump in right now. If anyone from Hedera would like to give a high-level primer on what is Hedera, maybe touch on the history and some of the unique aspects that make it different from L1s today.
Sure, Nick. Why don't I start with kind of history, and I'll hand it off to Mance, and he can go from there. So I want to introduce some terminology around how we on the council look at the history and evolution of Hedera, in particular through the lens of the governing council and the governance of this network. So really giving you my perspective on that. So we define this in three different phases. So phase one kicked off when Hedera Hashgraph, what we now know as Hedera Hashgraph LLC, was legally formed. During that period, phase one, the original member, so it was a single member LLC, was Swirlds Inc. And as the original member, the LLC, Hedera Hashgraph, was a sort of pass-through entity, really managed by that same management team of Swirlds Inc. Swirlds, of course, being the inventor of Hashgraph. And Mance can speak more about that. So that's really phase one, getting from absolute origin of Hedera Hashgraph LLC, the legal entity, to phase two. Phase two starts when we hold the very first formal council meeting. This was February of 2019. And here we are now a multi-stakeholder governing body. And we have authority that's distributed, not just with the original member, but with all the governing members. And the original member and the governing members now have the same vote on most decisions that affect the network and the treasury. During this period of time in phase two, the original member also had a lot of sort of special and temporary authorities and responsibilities to bootstrap this network, particularly for the security and stability of the network. So they were appointing the first council members, and they had seats on the board and a few other things to bootstrap the network. That brings us up to 2022 and where we are today, which is phase three. And what really separates phase two governance from phase three governance is some of the outsourcing and decentralization represented by Mance, co-CEO of Swirlds Labs, and Shayne, CEO of the HBAR Foundation. So over the past year, Hedera Council has decentralized major functions. So ecosystem development is now fully decentralized and over at the HBAR Foundation. Product engineering and developer community engagement, which you might call marketing, is in Swirlds Labs. And so we've now in this phase three, the distinction is Swirlds no longer has any of those original kind of bootstrapping responsibilities to get things going. The governance structure is considered stable and reliable with the 25, 26 now companies that we have on that council, Swirlds being one of many. And the only differentiator between Swirlds and all other companies on that council is that they have a permanent council seat. But they no longer have a permanent board seat. They no longer have a lot of those other bootstrapping responsibilities that they had to get things going during phase two. So that's where we are today, going from phase one, phase two, phase three. And the other thing I would say briefly before handing it off to Mance is around being a public permissioned network. So the Hedera network is, because you asked about what might be different. So part of bootstrapping and focusing on the stability and security of this network is to launch always as a public network. Anyone can create accounts, anyone can deploy applications, but it is permissioned. Only the council members can run mainnet nodes, or what some people would call validator nodes on the network. And we're doing that for the stability and reliability of this network. It really is a network that's enterprise grade, and those are some of the requirements that we've heard from the enterprise, from our own enterprise members on the council. And so that is kind of the history of being a public permissioned network, but it has always been the case to be permissionless. We are on our path to decentralizing the Hedera network into a permissionless network. And you can already see from the beginning, we have been decentralizing. It's just done in phases to hit key milestones. And this past year has been a big year for us, hitting several of those milestones. We still have a few more to go, such as becoming permissionless over time. And with that, I'll pause and see if Mance wants to add to what describing Hedera or the history.
Yeah, thanks, Brett. So we've always thought that there were two main value points for the project. One of those being the unique governance model that Brett has spoken about here at some length. And the other one, of course, is the technology. We don't use blockchain. We use something called hashgraph. Hashgraph is, of course, a consensus algorithm. It solves the same category of problems that blockchain solves, but some fantastic properties relative to blockchain. It was invented by my co-founder, Dr. Lehman Baird. And in just a sentence, the advantages of hashgraph are that it maximizes performance and security of the network, of the consensus algorithm, simultaneously. There's always been this trade-off between performance and security historically, going back decades, and hashgraph resolved that. It's got this property called asynchronous Byzantine fault tolerance. And because of hashgraph, we have both fantastic performance and the limit of what you can achieve in terms of security in a distributed consensus algorithm. The source code has been open for review on GitHub for years. And earlier this year, as one of these further steps towards decentralization, we announced our plans to open source that code base. I'm going to talk more about that in a little bit. You can read about this on the Hedera website. And as a result of the decision by the council to open source the code base, there was an open source task force that was established earlier this year. It's composed of council members and industry experts to help define and realize the full vision of that open source program for the platform. And while there's still a lot of work to do to sort of fulfill that full vision for growth and industry engagement, I am pleased to say, and I think today is the first time to say it publicly, that as of August 5th, the code base in the GitHub repository is all now Apache 2.0. And so the code base is now officially all open sourced. That doesn't mean that we're done with the open source program. There's a lot to do there. But this is a huge milestone for us for the project. And you're going to hear more about that in the coming weeks and months as well.
And Nick, since you did ask about how Hedera kind of compares to other networks, maybe a few words about our tokenomics. So part of how we're going to secure the network, of course, when we're permissionless, is through staking. So a couple of brief words there. The HBAR, the native token to the Hedera network, has two roles. As with other layer 1 protocols, it's used by network participants to pay the fuel costs required to make use of the shared infrastructure of our ecosystem, keeping mainnet node operators appropriately incentivized to continue to provide that infrastructure. And the second purpose of the HBAR, like other proof of stake layer 1 protocols, is to be used to secure the integrity of the consensus algorithm calculations by staking HBAR that's in their custody to mainnet nodes they trust, resulting in the community-driven distribution of consensus weight across mainnet node operators, thus securing the integrity of the Hedera state. And last but not least, just a reminder for those, or something new for those that may not know, the Hedera tokenomics is based on a fixed global supply of 50 billion HBARs. And most of those have not yet been released.
Yep, I think that was a fantastic summary from you both, right? So Hedera, permission network now, decentralizing, right? And as it decentralizes, it's going to scale, and it's going to scale with this novel hashgraph algorithm. So great summary there. And then, yeah, Brett, you beat me to my next section, which was HBAR. So I'm showing the visual here. So HBAR has got a maximum total supply of 50 billion, which is different from some existing networks, right? Where they have kind of this inflationary aspect to it. Some L1s, Polkadot, for example, you've got like a 5 to 10% yearly inflation. Varies per network, but you'll kind of see both models here. So what I'm showing is the distribution from the treasury of HBARs, right? And that tends to happen at the end of each quarter, okay? Is there like a final date in mind? I think you said 2025, Brett, right? When all HBAR should be in circulation. Is there anything else in terms of HBAR distribution, HBAR network effects that's worth mentioning?
I definitely did not say by the end of 2025 all coins will be in circulation. Sorry. No, there is no firm date. A fair amount of that unreleased supply is also unallocated. So there's two things that we report on. So we report to the market around what's been released, what a lot of people refer to as circulating supply. And we also proactively report what's been allocated if we have a fixed purpose for coins not yet released. And a lot of that 50 billion supply continues to be unallocated. So no, I think the date by which all those coins are in circulating supply is pretty far off.
Got it. Okay, so still TBD on the HBAR, when all tokens will necessarily be in circulation, but they're being distributed each quarter.
Yeah, in alignment with the adoption growth and the need for those coins to do those two purposes, to secure the network and to pay for consumption of services on the network. So as that grows and as there are opportunities to move the needle on network utilization, that's how you're going to see those coins distributed over time.
Which is another unique aspect of Hedera and HBAR, right? A lot of networks you'll see is they have this base level inflation where Hedera is kind of, releasing tokens as it pertains to network adoption and growth, which makes more sense in a vacuum. Shayne, you unmuted. I don't know if you've got anything you want to add here as well.
No, nothing to add so far.
Cool. All right, so let's jump down to the next section of the report. So now we're going to look at Hedera's network usage and performance over time. And the first thing we like to look at is transactions, right? So transactions can be different on different networks, depending on the structure and the architecture of the network. But in general, what we're seeing here is a trend down in transactions. Now, you'll see this across a lot of ecosystems because of just general market downturn, right? Is there anything here in terms of transaction activity that is worth highlighting? Is this just in line with the broader market, or is there something in Hedera that may be a cause of this, whether it be an upgrade, whether it be something being deprecated?
Yeah, I'll take that, Nick. Thanks for the question. Q2 2022 was historically a bad quarter for all of crypto, as you just mentioned, and we weren't immune to the broader market decline. It's evident in the graph, though, that total transactions dropped this quarter because it just so happened a few of the major use cases that were pushing significant transactions simply slowed down, and it led to an outsized impact on our quarter-over-quarter decline. So, this is unfortunate, but this type of volatility can be expected as projects go through a product maturity curve, as many founders are looking for product market fit. So as the use cases evolve, market dynamics begin to weigh in and/or the needs of the business grow, founders learn to pivot where the value is and what they've built. And this downtime during the transition is what you see reflected in this graph. But the key point that I would like to highlight is the stability, though, of the transaction fees. So if we were to compare the scenario of network congestion on other networks, we'd anticipate the fees would have come down this quarter with lower transaction volume. But in fact, the fees were the same. So it meant the network sustained the same fee structure, regardless of whether the network was, congested. Though to be clear, there really isn't any concept of congestion on Hedera.
Yeah, and you'll see by the visual here, right? Average transaction fees are less than a penny.
Yep.
So everything beneath that is basically nothing. So I think on the flip side of that, which is interesting, is you actually saw Hedera's user base increase during the quarter, right? So transactions were down, but people were actually using and creating wallets and joining the network. So that dichotomy is really interesting. Is there any particular reason there? Is it Hedera's growing in terms of popularity, or there's some more concrete reason we can point to?
Yeah, when you look at network popularity, you look at, active user growth, account growth, you look at transaction growth and volume growth. This quarter we averaged more than 33,000 users per month, which was a 51% increase quarter over quarter. So to contextualize this, from a year ago, the number of accounts has grown, and this is pretty impressive, 9 times faster than it did the previous 4 years. So you have Hedera really becoming a destination. And I think it's several factors playing into it. The fact that it's becoming open source, the fact that we've got EVM compatibility, the fact that we have incredible smart contracts. So not only is the number of users growing, but we're simply growing much faster than we ever have as a destination for developers to come to.
Absolutely. And I think eventually over time, you'll see that transactions will follow the active users, right? It seems like a natural inclination there.
Yep.
So that's Q2 and kind of the last year network usage for Hedera. Let's move down to another unique offering of Hedera, which is a Hedera Network Services. Okay. So what we're going to do here is we're going to go into each of the individual services and kind of their Q2 and prior year performance. But if anyone here would like to kind of set the stage for exactly what the Hedera Network Services are before we go into the specifics, I think that kind of helps people understand what we're looking at.
Yeah, why don't I take that? So there are 3 what I'll call primary services: the Hedera token service, the Hedera consensus service, the Hedera smart contract service, and then an additional 2 support services, the cryptocurrency and the distributed file storage services. Both of those are used by dApps for various reasons. It's the combination of these Hedera network services using the underlying hashgraph algorithm and platform that enables the functionality and scalability that we believe is required for mission critical applications, that those that are going to be serving large consumer bases and consumer use cases and enterprise use cases and others. So if we take a look at each of the main 3 that I'd mentioned in particular, the Hedera token service, that enables anyone to sort of easily and cost effectively configure, mint, manage native fungible and non-fungible tokens on the Hedera network, tokens of arbitrary type. And then there is the consensus service. This provides verifiable timestamping and ordering of events for any Web 2 or Web 3 application. And we've seen a lot of sort of Web 2 applications that they're already out there and trusted by the market today because they've existed in the marketplace for some time. They're not startups. We've seen them take advantage of this Hedera consensus service to add what we call Trust Plus to their existing product offerings. And then in addition to that, there are native Web3 applications architected from the ground up to be Web3 that can use this Hedera consensus service. Almost think of it like hashgraph as a service in their product offerings. And a lot of that traffic that we were just talking about, that TPS, was as a result of these dApps using the consensus service. And then there's the smart contract service, and that is exactly what all of our viewers would expect. It is Solidity. It is an EVM that is compatible with existing Solidity smart contracts out there. There are going to be improvements to these services in the future. We have something called the Hedera improvement proposals that we can talk about. But those three are the primary services. The smart contract service is used sort of as a utility service in some ways. When using these other services, you need to pay for those services. You use a smart contract, the cryptocurrency service, my apologies. And then also dApps need file storage. And we have distributed file storage that supports the dApps in these three primaries as well. I think that sort of describes the services and the related APIs. And then maybe Shayne or Brett, you can take the next part of the question. Okay.
If I can just make an observation, kind of connecting the dots with what we've covered before around the transaction volatility and these services, some of these services are high transaction services. So the services, they have different network costs and they also have different purposes. So by analogy, it's like, let's say you're an internet service provider and you're offering both email and video streaming to your users. Well, maybe you get a huge increase in email users, which is low bandwidth, but you get a couple of decreases in video streaming, and that would throw off your overall bandwidth measure. I think that is a pretty good analogy for what you saw with the transaction volume. A couple of high transaction volume use cases, likely leveraging HCS, which is designed for that type of use case. Those started using less of the bandwidth, but you see all the other user increase with all the other services. So just to connect some of those dots, and then I'll turn it over to Shayne.
Yeah, thanks, Brett. So, while each of these, I think Mance did a really nice job talking about the discrete services, and while they are discrete, they're oftentimes used together. They don't operate in isolation. So the beauty and power of the network is that they can be used together and frequently are. So the split of each of these services, though, does highlight a peculiar aspect between the Hedera consensus service and the crypto service, along with the number of users. So if you look at the table, the consensus service is responsible for a disproportionately small number of users, despite the fact that it's got significant transaction volume. So some of you may look at this and say, wow, that's odd. When you look at it, remember two things, and this might help you make sense. First is, the consensus service is like the engine of the network, so it is always being used. Second, the current enterprise use cases tend to really push large consensus services transaction volume. But these enterprise use cases are like centralized exchanges and are responsible for large volume with proportionally few on-chain accounts. So enterprises are currently mostly B2B organizations that predominantly use the ledger portion of the network. If we look at the cryptocurrency service, that really relates more closely to the financial or user-focused financial use cases. We've seen more activity and users associated with that service, even if the volume looks disproportionately small compared to how large the consensus service volume is. Some of that is just simply because we've got more native DEXs, more things executing on the crypto service than we had before. I'll also say we are going to anticipate these characteristics to change in the coming quarters and years as dApps that predominantly use the cryptocurrency service will start to push more transaction volume, with enterprise use cases also starting to drive growth of individual on-chain accounts. There's a few other points, Nick, that I think would be helpful to make regarding the consensus service. Given that the transaction volume declined, user count actually grew 13% compared to last quarter. So we're actually less worried about the drop in transaction volume because we know the user base is growing and is actually part of the overall volume and growth of the network. We're very excited by the seemingly explosive growth of the contract service, I would say, because it's easy to start from zero. But what we're seeing here is the first major dApp using the smart contract service, and it came to market in April. That was State of Hedera Labs. They have a product, liquid staking protocol, which went live in April. We saw over 400 million HBAR staked in the first month of go live. Since then, they've grown on average between 650 and 660 million HBAR in TVL with over 12,000 users. So again, the transaction volume dropped, but which is relatively consistent with the broader drop in transaction volume, but we're really buoyed by the growth in these types of use cases. With the file service, it's performing relatively consistent based on the apps that we've seen come to market. And the overall shift, I think, in transaction volume split across these different services and user account growth is in line with what we're seeing in the market. The fact that Hedera is truly becoming a destination to build, with several enterprise use cases continuing to mature and DeFi/crypto native use cases coming to market as well.
Yeah, I think you guys covered the gauntlet there, right? I think that was a great description. I think one thing that I would add, right, is that the transaction fees for some of these services, right, are fixed. And as we discussed earlier, Hedera, powered by the hashgraph algorithm, has low transaction fees. So that's helpful for retail users, right? Both also for enterprises. So they have predictable costs and they know what they're getting themselves into. So yeah, I think great description there of the Hedera services. If we want to just take a look, at each of these services in a little more detail and how they've performed over time. Here we've got the Hedera consensus service. Here we've got the smart contract service, crypto service, and then the file service. Before we move on, anything else or any one of these particular services you guys would like to dive into a little more?
Nothing for me. I tried to cover it in my opening preamble there regarding our network usage.
Yeah, the only thing I would add is that, at least so far, what we've seen is that really large use cases, large enterprise or that caliber of customer seems to have a particular interest in the consensus service, where the other services are preferred more and used more by the Web3 community. And I don't know exactly how that's going to evolve over time, but the big use case, what I should say or categorize as high volume use cases that we have experience with and anticipate coming to market, are going to be using that consensus service very heavily.
Yep, hashgraph as a service. I think that's got a huge product market fit there. Okay, cool. So those are your Hedera network services. Let's move on to some more traditional aspects of crypto layer one ecosystems. So here we're looking at Hedera NFTs, right? So you'll see from this visual that Hedera NFTs have been trending upwards, okay? So I've got here that in Q2, Hedera had 258,000 NFT transactions with roughly 8,000 unique users. Some of the NFT marketplaces on Hedera include Zeus Market, Hash Axis, Turtle Moon, and GoMint, right? And like all transactions on Hedera, the NFTs have low costs. Anything that anyone here would like to touch on in terms of the NFT activity taking place?
Well, I'll start. I think what's noteworthy is that the Hedera token service, which the NFTs, of course, are based on, was actually kicked off in 2021, but it's really taken off this year since we integrated the new version of the Hedera smart contract service with the token service. And that happened in February of this year. That combination sort of started the flywheel of ecosystem growth that we're now seeing for the first time. And we believe it's because that combination gives developers the performance and security and cost benefits of a native token service running on hashgraph, but with the full programmability of smart contracts. And that combination is unique in the industry. And since then, we've seen some of the growth that you've already mentioned, almost 500,000 NFT transfers from other networks to Hedera, over 200,000 NFTs minted on the network. And it's all during this period of time when the NFT market overall has seen a slowdown, with June daily transactions dropping to their lowest in a year. So we're clearly bucking the trend here as the creators and collectors realize that value of that combination, building and transferring the collections to Hedera, a cost-effective network with a good ecosystem, and we haven't touched on it yet, but also from an energy efficiency perspective, the greenest network in the market, as far as we can tell.
Yeah, Lad, you mentioned 4 of the native marketplaces where NFTs are reflected. Zeus in particular transacted over 35 million HBAR within the quarter, and we attribute that to a few things: an easy to use UI, really great user experience because of their network characteristics, and they just got some really cool art. So we want to continue to grant types of projects like this to continue to grow the interest in the NFT community, and it's been fun to watch.
Yeah, it's got to be encouraging, right? Seeing the NFT ecosystem take off on Hedera. You mentioned Mance, the smart contract service, right? So another thing that I think is really encouraging from a Hedera perspective is the developer activity. Okay, obviously we're in a bear market or a downturn market, but you want to see developers continue to build and continue to progress on the network, and that's what we're seeing here, right? Consistent and somewhat upwards trending developer activity over time. I know that there are some smart contract service kind of development plans for the second half of 2022. So does anyone want to touch on the developer activity and some of the future plans to support further developer activity in the market?
Yeah, I'm happy to kick it off, and I think it starts with the EVM. So we've introduced the second version of the smart contract service. It is an implementation of the Besu EVM, which of course is Solidity, that's been optimized for the Hedera network and using hashgraph consensus. For the developers, it has a lot of really compelling features. It has no congestion fees for gas. All the transaction fees are fixed. So as you've already pointed out, when a developer or an organization needs to have some certainty about what their cost of goods are, think of it in those terms, COGS, cost of goods sold, are going to be, they can plan appropriately without being at the whim of the market volatility of a native token that's normally required to pay for the network services. We don't have that. Everything is denominated in USD. In terms of the EVM itself, we can process 15 million gas per second. It currently can support 300 plus transactions per second. And as I've already pointed out, it's integrated with our other services, and specifically the token service. Its integration with the native token service has support for ERC20s, 721s, the 1155 standards, and the native token service has capacity for up to 10,000 transactions per second. And again, the transaction fees are tiny. It's a penny of a penny, per transaction. So the cost model, the pricing model, the performance of these services and the way in which they all work together really provide a compelling value proposition to Web3 developers.
Yeah, I'll add that the quality of developers that we're seeing and projects on Hedera is unparalleled. I mean, we're seeing developers focus on really solving a lot of old world problems in new ways across use cases in DeFi, extending that to TradFi, the metaverse, supply chain, sustainability is a big area of investment, IT service levels, real estate, fractional real estate contracts. So we continue to invest in the developer ecosystem, doing an average of 6,000 developer events a month, where we're either sponsoring developer events, we're providing bounties for hackathons, we're judging a competition, or in some cases, we're doing all three. So we believe, though, that it continues to accelerate because of what Mance just talked about, the evolution of the technology, the connectedness between the smart contract service, token service, the fact that it's open source. You couple that with the grant giving of the HBAR Foundation, and you really have a recipe for significant growth and adoption. So, it's become a destination for developers of all kinds, both enterprise and crypto native alike.
Yeah, the developer activity is encouraging. And developer activity, unlike most metrics you'll see, is actually a leading indicator, right, of things to come. So one of the more important metrics that I think we like to track here at Messari.
Great point.
So moving down here on the list. So we touched on it earlier, right? I think it's one of the core components of Hedera, the governing council, right? We've got 26 entities. Some of the bigger name ones that I think people are familiar with include Google, IBM, and Boeing. Each runs their own node. But what we did not talk about was these Hedera improvement proposals and how those are a way for the community to have their voice heard. The largest of those being the HIP 406, the staking proposal. I believe we touched on staking a little bit earlier. So does anyone want to talk about these HIP proposals and then briefly mention how staking, that proposal in particular, took place earlier this year?
Sure. Well, why don't I take HIP or the HIPs, and Brett, I'll let you handle the staking, or Shayne.
Okay.
So the Hedera improvement proposals is the mechanism by which the community at large decides what it wants to be developed on the platform. And so we have community members that come together and will write up these proposals, and then there's debate, and the debate goes into the design. I mean, the proposals themselves can become quite detailed in terms of the implementation of the various features. There is a committee, the TechCom is what we call it, the technical steering committee within Hedera. It's part of the governance model. The technical steering committee is composed of various council members, and those council members take the HIPs as an input and help to prioritize the development of those HIPs. Now, the HIP plan has been, I think we rolled it out maybe a year ago. I forget exactly when, but as you pointed out, the HIP, the HIP on staking, I think, is the one that has been most debated and discussed, and we're of course now deep into the development and rollout of that whole staking program. But that's what the HIPs are for. They're there to help guide the direction of the platform from a feature perspective.
Yeah, I'd just add that the HIP process was put in place in support of the services layer, which has been open source for quite some time, also licensed under Apache 2. In 2022, what we've added is open sourcing the hashgraph, underlying hashgraph platform. But we've been building this culture around open source contributions from the community, from the developers building on the Hedera network for quite some time. We're just taking it to the next level in 2022. And so it's great to see that level of engagement from the community. You do not have to be affiliated with a council member company. You do not have to be a member of the Hedera Council to fully engage in expressing what you believe the requirements are that should drive the roadmap and evolution of this technology.
Yeah, I think undoubtedly HIP 406 staking has been the most discussed and the most popular HIP proposal. So good to see that, right? Nice to see the community engagement there. So that is a lot of what is Hedera and some of the more quantitative analysis of all things Hedera. Let's move over to the more qualitative section of the report, okay? Despite the bear, right, there's a ton happening in the Hedera ecosystem. I think one of the more encouraging things, okay, is the amount of funding that's going into the ecosystem. So we have $555 million in funding. In early March, $100 million Sustainable Impact Fund was announced. There was a $155 million DeFi-focused fund, and there were also a metaverse and a fintech-focused fund, right? A lot of money going into the ecosystem to build this thing out. Anyone here care to elaborate on any of these funds, the higher level picture of what these funds are trying to accomplish? Feel free.
Yeah, I'll certainly take that and start off, and Mance and Brett can chime in. The easiest way to think about the HBAR Foundation is we operate like a venture capital firm, but in a foundation's body. We're most often investing in early stage projects, which simply are going to take time to bring a product to market. But like a venture firm, during and after the product is built, we continue to support the builders, creators, founders with financial, technical, and marketing support. And that's in partnership with Swirlds Labs. And I think it would be helpful to kind of unpack these funds besides just the dollar value of that we've allocated each fund. Let me tell you what they're focused on and a couple of the grants that we've given in these areas. So first is the Crypto Economy Fund. You see it's a $155 million fund, but we're really focusing on supporting opportunities that support the adoption of HBAR, on-ramps, off-ramps, exchanges, wallets, and the broader DeFi ecosystem. So to give you some examples, Stater, I mentioned it earlier, liquid staking, averages around 650 million HBAR and TVL, give or take. Saucer Swap, which is a recent native DEX on Hedera that's really taking advantage of all the developments that came before it. They launched an NFT collection to raise funds for their own development. And then they have several pools around HBARX and the liquid token from Stater staking app. That is growing significantly. I think within the first 24 hours, there was $11 million staked, if my number, I think, is accurate. The second is the Metaverse Fund. And while it says Metaverse, let me just say it's really focusing on consumer brands ranging from gaming, sports, music, et cetera. Anyone looking for tokenization of tickets, as an example, or tokenization within a game, or maybe tokenizing, a specific luxury brand. Some examples there, and the focus of that is to engage their fans to create more loyal, engaged customer bases and facilitate community growth. I've mentioned Zeus and Hashgraph, which are native NFT marketplaces that we're seeing. Sale, which is a Hedera native CRM and commerce platform. It's launching NFTs with Hendrix Gin as another example. These are some of the biggest that we haven't publicized everything that we've invested in here, but some really, really exciting ones that you'll see coming to market soon. Sustainable Impact Fund. This was a $100 million fund. So we're kind of launching off the greenness of the network itself and how we're carbon negative, and really focusing on addressing the need for greater transparency in environmental and nature-based markets. So the fund's tackling issues around how organizations, governments, and the broader environment interact, right, by working with and investing in applications, exchanges, and providers, trying to really audit all of these carbon credits, carbon offsets, renewable energy certificates, et cetera. You'll be surprised at the amount of negative things that are happening in that market that are that need to be validated. So we have the Guardian, which is an open source digital measurement, reporting, and verification tool, which continues to see increased adoption and is powering the regenerative finance or refi ecosystem. This quarter, we've also seen the first carbon emissions tracking use case go live with the Guardian, with the Queensland government tracking carbon emissions using a grantee that we've given called Timeless and their platform. And then finally, our payments and fintech fund. Hedera's core competency to date, as you guys know, have been to work with large financial institutions to adopt tokenized solutions for cross-border payments, stablecoins, CBDCs, and the like. And this fund's focusing on supporting the platforms and institutions seeking to accelerate the use of cryptocurrency in traditional finance and applications. So, we're seeing more and more of this. One example of this in the crypto economy, partnering with the Crypto Economy Fund, is institutions adopt these decentralized solutions in their core business, like ANZ Bank, as an example. So we wanted to structure our fund deployments aligned to key markets so that we could simply measure the success of our grants. It also gives us the flexibility to create new funds as new markets or focus areas emerge. We did this recently with a female founders fund and the decentralized identity fund, which are two important elements in today's Web3 world.
Yep, I think an exciting time to be a prospective company for the Hedera ecosystem. Brett, Mance, anything else? There's a lot going on here with these ecosystem funds you guys would like to touch on.
I'll just say that I think there's a theme emerging when you kind of, as Messari has done, you kind of take a objective view and measure of what's happening in the Hedera ecosystem. I think there's a theme that weaves through all of this, and that we're doing the things that need to be done to support really large scale deployments on this network. So the fact that all of the services are priced in USD, that's how businesses budget and plan to go to market with a solution. So that's helping them. A lot also with innovation programs. Innovation programs often kind of subject to scrutiny when market macroeconomic conditions tighten. Innovation programs, taking the heat off of them, making it easier for them to move forward through the activities that the HBAR Foundation is leading with all of these funds. Everything we're doing is just helping companies take the best of Web3 and start integrating it into their enterprise.
Yeah, long-term mindset, right? I mean, this is a long-term game here, and I think Hedera is taking that approach, which is the approach you want to take. Okay, so those are your ecosystem funds. Yeah, go ahead.
I'm just going to say, and it's no surprise if you look at those stakeholders, right? If you look at the council members, their sun doesn't rise and fall with the price of crypto. They're there because they believe this technology solves real problems in their core business. They're robust. I think even though we wouldn't have invited it upon ourselves, the macroeconomic challenges that have hit 2022 have really kind of separated projects that are really dependent on speculative investment from those that are really built on a long-term foundation. So we're really happy with where we are and where we're going and who we're working with.
Completely agree. And it's, again, reassuring that you have the development activity to back all of that up, right? So that's very nice there. All right, so let's move down the list here. So I've got some challenges here. I mean, we can briefly touch on this. Some of the things that I mentioned, right, and we've talked about them on this call, is the decentralization of the network, some of the inconsistent network activity, and then the tougher competition amongst these layer ones, right? I don't think it's a stretch to say that there are some larger ecosystems out there. Ones that come to mind are Ethereum, Solana, Avalanche. There's a whole bunch of them these days. Some of the challenges I laid out here, right? We don't have to go into any of these, but is there anything that comes to mind for you guys that are challenges either now or in the future that you think Hedera has to deal with? I know there's a million, but anything specific that is worth noting here?
That's
okay.
No, sorry, we'll comment on this.
Say is, it's interesting. Being one of the founders, we knew when we started this that what we were doing was very different than what anyone else was doing in the marketplace. Everything about the project is different. The governance model, the technology, the go-to-market, it all is different in its conception and its execution than what the other layer ones are doing. And when we started this, Lehman and I, and you can go back 4 or 5 years to look at the videos, we started by saying we're building a company that we want to be around for 100 years, 100-year company. That's it. And so what does that mean? That means that you have to be aware about what your competition is doing, but you don't always have to be influenced by it. And by and large, we aren't. I mean, we are independent. We view ourselves as being independent and outside of the fads, and have focused on the fundamentals. And that shows in the quality of the platform, in the quality of the technology and the APIs, and how they are designed for the long-term use cases, for the enterprise grade and mission critical use cases. It shows in how we are trying to solve the problems that both the Web3 community has in their in the cost and performance issues that our competitors have, the L1s have, but also a recognition that ultimately enterprises are going to come around, enterprises are going to deploy, and that's going to fundamentally change the game in the face of the industry when that happens. And I think that Hedera is uniquely positioned in the market for that enterprise and large consumer play, large consumer use case play. And we've kept our heads down and we've built as opposed to try and pump. We don't pump. You'll never see us pump. But what you will see is steady progress and steady building. We've demonstrated that over the years. And, I think that will play out very well when the final analysis is made on what the L1s are going to be that are here for 100 years.
Yeah, and I would just add, Nick, that when you look at all that the team, starting with Mance and Lehman, had built and is here now. I mean, when you look at on a timeline, the foundation, which was the first entity, really focused on incentivizing and building this ecosystem with them in partnership. We announced that September of last year, and in earnest, because we're like a startup, we were getting operations set up, et cetera. In earnest, we began giving grants in February of this year. So from February until now, we deployed over $300 million across 120 plus grants. So that to me is impressive. And I think that's why you're seeing the combination of our three organizations, the evolution of the technology, the governance model, and now the incentive structure really starting to take shape, and why you're seeing growth in many of these numbers. And you will continue to do so as we continue to invest and enable many of these enterprises, DeFi ecosystems, et cetera, to build.
Yeah, and Nick, the only thing I'd add is I think we are going to talk about kind of what's coming next. We got roadmap up there for us to speak to. But just to be fair to the challenges, I would say from the perspective of the Hedera Governing Council and the network operators, we're going to go as far and as fast as our stakeholders carry us. And so the challenges are, like, it's not just a crypto winter. There's been tough economic challenges that hit all sectors in 2022. So to keep everyone focused and everyone continuing to pull in this direction, this is obviously Web3 is an innovation investment. Not every company is ready to dive in and go big on innovation under those macroeconomic conditions. And that's why I mentioned earlier, part of the things we put in place is to ease that and keep that momentum going throughout such downturns. And when we talk about the future, I'm going to say more about what's going really well. But that is the challenge, and our approach to that challenge is going well.
Fantastic. Yeah, I think, per those responses, right, another theme of the Hedera network is this long-term, we're in a marathon. This is not a sprint mindset. So there's no need to compare yourself now. It's about what we're going to be, not what we are today. So Brett, yeah, to your last point there, the roadmap, right? We're coming up on the final 5 minutes of this call here. So let's look forward. What can the community and some of the Hedera customers expect from Hedera for the second half of, I guess we're, the last third of 2022 at this point, 2023. What do people have to look forward to when it comes to Hedera?
I'll get it started, and I'll come back to what I talked about with that phased approach to what we're doing at Hedera and the rollout and the growth and decentralization of this network. So, as I said, we're in phase 3, and phase 3 is really about the companies that use this network really leaning in, running and delivering and taking this network to the next level. And so I've got some great examples of that. That's the real payoff of phase 3, right? So phase 3 has sort of this, it's better decentralization. That's nice. It has kind of these foundational elements I talked about before. But the excitement and the icing on the cake of phase 3 is our council members getting more involved in network use. So one example is what we've done so far this year is form something called the Corporate Utilization Committee. This is a group formed by council members, led by council members, and they've created a program called the Enterprise Accelerator for themselves, their customers, their partners, and their peers in the industry to really help ease that onboarding, go from concept and design to deployment of these Web3 use cases, taking advantage of some of the unique capabilities of Hedera. So that Hedera Enterprise Accelerator is one of the bright spots of phase 3, the way the council members have engaged and the use cases they've been sharing with one another, and they're collaborating with one another, and the partners that we have in the industry. Swirlds Labs being technical subject matter experts that can help them. We've got other SIs lined up to engage in that program and help onboard those enterprises to get from proof of concept to deployment, and the work of the HBAR Foundation, who are often invited as experts to Hedera council meetings and council committee meetings. And I anticipate they'll play an increasing role in the corporate utilization committee and that enterprise accelerator program going forward.
Shayne, Mance, as we wrap up here, anything roadmap related or just high level you guys would like to touch on?
Yeah, nothing really specific other than we're just going to continue to build on the strategic investments we made in the first half of the year, focus on facilitating the growth of the modular DeFi ecosystem, the support of other NFT marketplaces and creators, unique business models, and then focusing on the enterprise and consumer use cases across all of our funds.
Yeah, and just to comment very briefly on the tech, obviously the roadmap, if you're not familiar, the roadmap is published on the website. It's just hedera.com/roadmap. But for the rest of the year, it's a continued focus on rolling out the staking program, continuous working on the community nodes. And then we have additional smart contract improvements in mind, along with further integration with the existing tool set that works with Ethereum. If it works on Ethereum EVM, it should work on Hedera EVM. And we continue to make progress in all those areas.
All right, great. We're at the top of the hour here. Shayne, Mance, Brett, all of the Hedera community members who tuned in. I want to thank everyone. I think this was a great call. I think we touched on all aspects of Hedera and has me excited about what's to come for Hedera. So I think this was really nice. Before we go, last thing, I'd be remiss if I didn't say Messari mainnet is coming up, right? That's at the end of September. I haven't looked at the list recently, but I believe Hedera is like a top level sponsor for mainnet. So that's exciting nonetheless to keep this partnership going. Thanks again for everyone for tuning in.